Good afternoon, everyone. This is Michael Venezia, head of the Equity Trading Division here at Tradeview Markets. This is our second webcast of the year. Today is Friday, January 16th of 2015. Once again, we'd like to welcome everybody. The first 10 trading days or so of the new year has been a very, very volatile one, so I hope everybody there is being prudent and letting their winners go and selling their losers. So I'm not going to pontificate, but that's an important rule in volatile markets, so remember it. But the topic that I'm going to deal about this week is probably the one most dearest to me. It's what I live by. It's my mantra, and it's why trading volume tells the story. So before I get started, if you have not yet, please go back to the Reiner Report. I wrote an article, probably my best one to date, if I may say so. It's December 18th, titled Why Trading Volume Tells the Story, and it's our topic this week, so I'm going to get right into it. And I'm going to give you 4 stocks that have been recently in the news, either with fundamental news or earnings or just a pure frenzy pop culture play, if you will. So let me get back to them. There are 4 stocks in New York, and the first one is Ocwen Financial, the symbol OCN. Ocwen Financial, in the beginning of November, had material news. You see the stock was basically dormant for 4 months. One day on 10/21, the stock pre-announced and said California was seeking to suspend their lending practices. The bottom line, it could be Apple, it could be Micron, it could be Procter & Gamble. But when a stock right here that normally does 1 million shares a day does 20 million, I'm watching that, especially when it has a range from $26 to $16. So if you can see, I look for this type of resumption volume again. It's closed below this previous low and continued. These are the type of situations where I call them special situations, where they happen every so often, but you got to keep your eye on them. Second stock I'd like to talk about is Digital Ally. This stock right here went up because of the Ferguson riots. If you're not familiar with what's been going on in the U.S. in the middle of August, this stock was $4 and basically traded 100,000 shares. 4 days later, it was trading 20 million. It went from $4 to $32. It rested, popped back up, and now it's not really a play anymore until probably there's some sort of disrest in the United States or somewhere else. But this is something we look for. You have to be in these stocks, and you got to play them. If you don't take them overnight, you can resume them the next day and you play them. The next stock I'd like to talk about is Office Depot. Here we go with Office Depot. Right here on November 4th, Office Depot beats forecasts but keeps warning, but had several target increases that day because all the analysts thought that the bad news was out there and there was no more bad news to come. So the stock went from 550 to 650 on 50 million shares that normally does 10. It rested, it based, big volume again, it continued its resumption play and just went up from that. That's a great pure play. That's a stock that had good earnings. All the bad news was out and the analysts backed it and the stock continued on the uptrend, and I like that type of stock. That's what I play. The last one I'd like to talk about is Apollo Education Group, a scandalous group at best. You can look at the other stocks in the group, ESI, Straya, Coco, Seco. This stock has been prone to bad news. It's an online education platform, and you can see what happened here. The headline here is that Apollo falls 66% as enrollment woes continue. The stock closed at 32, opened at 28, closed at 27 on a tremendous volume. Once again, the market has been weak the past 3 days, which maybe it could lead to its concerns, but certainly I would happen to think if the market was staying strong, that this stock would at least have gone downward, if not resumed its down play. So with that being said, I want to use these 4 basic examples of stocks that I use and how they work in place. Sometimes they don't work, sometimes they do, but you have to be in where volume is. There's a cliche out there that you can throw everyone out the window. Volume tells the story. So I'll leave you with that. Please go over these charts, look at some other ones and see what's happened. Paper trade, if you will. But with that being said, please go back and read the volume article I wrote. There's nothing more important. This will be my predominant theme going forward with my webcasts, with my trading webinars, with my everything. So please get used to the volume. So I want to thank everybody for tuning in. But before I go, on the Reiner Report, as I said in the first webcast of the year, you can go on the banner. We're offering our compliments that myself and my team of traders compiled. It's about a 250 to 270 page manual, ranging from topics from trader psychology to pivot points to trends, you name it. I mean, it's a great thing to have and always refer to. I'm very, very proud of it. And if you go to the Reiner Report again, there's a banner there where you can sign up, compliments of us. I personally will be giving you an email back and thanking you and tell you what we have going forward. So once again, go over the webcast again, read the article, sign up for the manual, and stay tuned for the webcast going forward. But until then, do your homework and trade prudently. Thank you.